Wow. All right, we got a lot to talk about with this one today. Figma. Figma IPO had a lot of drama. A lot of happy people, a lot of sad people, and one very, very rich man. We'll get to all that, but first we need a little bit of background. What is Figma? Why is it generating so much buzz on the streets? What's going on here? Figma, as the CEO himself says, is the Google of design. Now, what does that mean? Google, as we all know, has a suite like Google Docs, Google Sheets, Google PowerPoint. It's all one integrated system where you can work on different things with people in a collaborative environment all at the same time, right? So that's Google's real staple technology. And Figma essentially does the same thing for a graphical design environment. So think front ends of websites, think marketing campaigns. Everybody's in on the document or the presentation or the graphical interface all at the same time. Now that's great because anytime we hear a comparison to a big tech company like Dylan Field, the CEO, says, they tend to generate some buzz on the streets, tend to generate some camaraderie around the name, right? So pretty much anybody and their mother probably could have seen this coming, that this company would do well when it went public. This really spawned some drama, as we'll get into. Figma at IPO was trying to raise $1.2 billion and come out at about a $20 billion valuation. And as we can see, raising $1.2 billion certainly doesn't even hold a candle to some of the IPOs we've seen. So what exactly is generating all this hype? Yes, we understand there was a comparison to Google. It seems like a big tech company. It's a former Brown dropout that received the Thiel scholarship. So obviously a smart guy. But what's generating all this hype and drama? Well, for context, one, this company Figma was supposed to be acquired by Adobe for $20 billion. Now, that's kind of ironic, right? Because 3 years ago, they were to be acquired for $20 billion. And now they IPO on public markets at a valuation of $20 billion. That's a real salt in the wound for Adobe, right? Seeing that their investment goes public and, well, as we'll see, absolutely skyrockets out of nowhere. Again, it kind of shows that it doesn't really take a whole lot of analysis to see, wow, maybe Figma on IPO day has some potential to go up and get me some returns, right? That really doesn't take too much analysis if we just look at this example. Another reason there's so much hype around this IPO is, well, there's not really many IPOs to be hype about. I mean, look at this right here. This is insane. We basically haven't had, relatively speaking, any IPOs over the past 3 or 4 years. And as we can see in 2020 and 2021, those years were absolutely filled with huge IPOs on the market. Pretty much it seemed like every other day. And no matter what, you could just blindfold yourself or hire a monkey to do it for you, but you pick anything, any IPO, and that's probably gonna double and triple over the next 2 months, right? So obviously that started to generate a lot of buzz, a lot of hype. And as we know, this was mostly due to Biden stimmy checks, Biden bucks, easy money. I mean, there was literally, the Wall Street Bets page was calling this time easy money. You buy anything and it went up, right? An interesting time, but as we've seen, that's died down significantly. And so maybe that's getting, that's getting like the gambling blood going again, pumping the blood up. Like another opportunity, another IPO where we can make some easy money. And as we all know, in 2020 and 2021, we saw some, not just the IPOs, but we saw some very fundamentally sound, very strong business models, some of the best products we've ever seen. Those stocks absolutely exploded. I mean, look at this one. We got 2,400% 15 days. Yeah, that's my friend. That is GameStop. Okay. So clearly there was some hype back then because you could pretty much buy anything and it would go up. Retail had a lot of money. So it's getting people feeling again like, hey, maybe this is another opportunity like that. It feels like with the two recent IPOs, especially of Circle and CoreWeave, I mean, these things literally went from, what is this, 60 to 300. We're talking about a 5x, and then we have a 30 to 180, a 6x in a month, 30 days. And these two IPOs definitely got some hype going, but I'm telling you right here, this is probably one of the best tests you can run. If we take a look at the Figma prospectus for the IPO, so basically just some filing that wants to convince investors like, hey, this is a good opportunity. if we simply search in here and do AI, yep, there, as you can see, the AI test has been passed. 156 mentions of the term AI. So obviously, if you mention AI that many times, your company has to be worth at least $20 billion and probably more. Wow, this company does AI, and the two other companies that had to do with blockchain and AI went crazy. This one has to do well. And so as we can see, investors probably expected something along the lines of this. This is candle for day one. Looks realistic. And let me tell you, that's exactly what we got. I mean, we went from 33. Well, no, we didn't go from 33 because only private investors got that option. But we went from 33 to 115 pretty much instantaneously. And, you know, I don't want to brag or anything, but I'm actually a pre-IPO investor, and I got in at that $33 price, sold for 10 shares. 10 shares, yes, that's right. I put in an indication of interest to receive 303 shares at about an investment of $10,000. Because, you know, I thought with my deep analysis that I did with the AI test, I thought this was free money, and so did a lot of other folks, as we'll get to in 1 second. And yeah, they gave me 10 shares. So we're going to get into why this caused so much drama in a second, but I do want to say while I have this on my screen, I mean, as you can see, this is pretty much a free money glitch. We went from 2 p.m. when IPO listed on the exchange, when investors could officially buy it at $93.50, to 6 minutes later, 104, and 4 minutes later, 112, and then we finished the day at 115. So you can see, I mean, if you got in at the $33 price hold, you were up 250% pretty much instantaneously. This is a pretty much infinite money glitch, and I'm going to take this opportunity now to pitch subscribing to the channel. If you want to find more investment opportunities like this, I do some really deep analysis, as you just saw, and I can find opportunities like this pretty much anytime. So make sure you like, subscribe, and let me know what price you got in at. All right, so let's go check out what the community thought about this $33 share to $112 when you could actually buy it. If we go over to our friends at x.com, we got this financial account here, Zero Hedge, has about 2.2 million subscribers, tweeted out at 12:26 p.m., so think an hour and a half before it was actually listed on the exchange, Figma shares indicated to open $100 or $105 each. Yes, that's right. There was so much demand from everybody and their mother to buy this stock. It literally tripled instantaneously, as we just saw. Now, what did everybody think about that? So if we scroll down here, we can see that Ponyboy Pablo could have 40 grand. Instead, I have 100 with my one share. We have Harambe was framed. I requested 200 shares and got one. LOL. Clearly, public investors, or retail investors, I should say, weren't exactly exposed to the same opportunity or the same fulfillment of that opportunity as, you know, VCs or private equity firms might have been. And that makes sense. That's always been the case, right? We all know that the private sector gets access to opportunities far before the public sector does because they have money. And when you have money, well, let's just say you have more opportunity. And as we can see, this is where the drama starts, right? We have the top 10% of people by net worth account for 67%. 67% of the wealth in the United States is held by the top 10% of people. And now clearly that gap's only growing, right? This is getting wider, this is getting wider, and you can see this right down here staying the same, the bottom 50%. I mean, this has always been the case. The rich get richer, the poor get poorer, right? And I respect what SoFi is, the brokerage I went through to get my shares, to get my big 10 shares out of 303 that I asked for. And I think on Robinhood, people were allocated one share each, no matter how much they requested. I don't know those numbers for sure, but what I will say is, like, I respect them trying to go out of their way and create this avenue for retail investors like myself and you probably to, you know, get access to a private opportunity. But it's kind of a kick in the ass when you allocate, you know, one share when someone wanted to invest thousands and thousands of dollars, or 10 shares in the case of a $10,000 request. So at some point, like, yeah, we can be happy we got in on the opportunity, but it is funny to just give like one share. And again, I think it's great. This is a great step in the right direction, but in terms of execution, it causes some resentment between Robinhood and its customers potentially, right? They're trying their best, I understand, but that's pretty annoying. And as we just saw, I mean, this wealth gap isn't going away anytime soon, and Figma is certainly a good star on the wall and picture of that right now. And so, you know what? That's enough complaining about the wealth inequality and whatnot and the opportunities that we don't have access to that other people do. The VCs and Ps, they're going to be happy. A lot of them were just made millionaires. A lot of them can retire, never work again. But I will say, if there's anybody to be happy for, it's this man on the left, Dylan Field. This guy is 33 years old. 33, man. And we're going to go over his compensation package in a second. But I want to go over this term quick, give some context to this conversation. This is hilarious. This term, moonshot, refers to a type of plan where it's high risk, high reward. You incentivize CEOs to make these potentially risky but high growth opportunities and investments in order to unlock a ridiculous amount of money in share value. And now we can see Musk's compensation plan. It came out to roughly 55 billion, I think it was, if Tesla held above 650 billion for 6 months. At the time, when this compensation plan came out, this seemed nearly impossible, right? Like at the time, it was about a 12x in stock value, but it was shut down on some procedural stuff. So we don't even need to talk about that. That's not the point. But moonshot just now is a way for an executive to unlock a lot of share value over time. And so as we can see, Dylan Field right here, this is his compensation package. He already owns 11% of the company, okay? And I have 2 billion on here, but that was before Figma pretty much 4x'd. So we can say that's about 6 to 8 billion now. And his moonshot plan, as we call it, I think this is funny to call it a moonshot, but his moonshot plan is if the 60-day average of Figma's price stays above 130, then he unlocks 2 billion in share value. Now, I don't know if you're thinking what I'm thinking. Everybody and their mother knew that this stock, based on the crazy AI test that we did, right? What was it mentioned 150 times? The IPO craze recently with CoreWeave and Circle, and then the context of Adobe wanting to purchase this company for 20 billion 3 years ago. Like, are we not going to account for maybe this company grows? They have 95% of the Fortune 500 companies as customers. I'm a little confused as to why there was any question as to 20 billion being a potential underestimation and an investment opportunity for those that were interested. And so I don't know what we're talking about with like moonshot here, but moonshot, like, we're already above the price. It's been 1 day. It's been 1 day of trading, and we're above the moonshot price. That was supposed to take him years and years. This was supposed to be a multi-year, maybe even multi-decade process that incentivizes a CEO to make decisions that benefit the business, right? And he's a smart guy. He's going to continue to make good decisions, but it's just funny how we set out this moonshot plan. And it's already there. It's already done. With all that being said, good for Dylan Field. Good for any of you, all retail investors that were able to get access to this opportunity. Whether it's 1 share, 10 shares, 10,000 shares, makes me sad. At least this is a step in the right direction. And yeah, it's going to cause drama because we get 1 share instead of, 300 that we requested. Obviously, it's going to be like, oh, well, I could have had a free $30K instead of $100, right? So that stings. But maybe this marks a true turning point. Maybe there's going to start to be more opportunities that open up to retail investors in the future. But at the end of the day, we all know there was a loser and a winner of this. Private equity, VC, institutional investors, they're really happy. Most of them probably made millions. yesterday and today, and the retail investor, we're still sad. So it does really bring to light that issue of, wow, like when you have money, it's definitely a lot easier to have more money, to make more money. And this is just my opinion, but this was probably one of the most no-brainer opportunities I've seen in recent history. And to think that there's some people, firms, venture capitalists out there that had the opportunity to push millions, if not tens of millions of dollars into this at the crazy price of 33 a share with a $20 billion valuation is quite crazy. It's quite crazy. To me, it shows that just the private investment world is just such a house of cards, right? Like, the only reason they make so much money, and there's a lot of smart people, I don't want to take anything away from them, but the reason they make so much money is because they get a lot of potentially very easy opportunities that triple, quadruple, quintuple their money almost instantaneously. A lot of people wanted to do that yesterday and today with the Figma IPO. They didn't get to. A lot of VCs and PEs and whatever did. So it brings to light that wealth inequality, and I guess we'll see what happens. But if there's an infinite money glitch, it's getting access to opportunities like this. Now, let me know what your guys' experience was. I just went on Twitter and I saw the various replies about how people only got a subset of what they actually asked for, but I want to hear what you guys experienced and your perspective as well. Am I missing anything? Do you guys run the AI test? I'm telling you that's a good one. I guess I'll see you in the next one. Peace.